guests joining us on the show. We have Kunal Bothra, Naresh Mirani, as well as Siddharth Khemka joining us on the show. Kunal, let me begin by asking you, it's the day of the weekly options expiry for the Bank Nifty, and there's a bit of an outperformance there in that index. What are the best trades, if any, in terms of individual stocks as well as the index level when it comes to Bank Nifty?
Good afternoon. So, would not want to initiate any major trades on the index front because I would still believe that we are making a pattern of lower highs and lower lows over the last 4 consecutive trading sessions for the Bank Nifty specifically. And I think we've already ebbed off some 500 to 700 points so far on the banking index in the last 4 or 5 days. And the Bank Nifty has also come back towards I think a 1 month closing low after yesterday's close sub the 47,500 mark. But the bigger positive sign which is emerging today is the rise in premium for the Bank Nifty. Even though it's marginally higher, so I think from 168, 170 points, we're seeing the premium back again to 210 to 20 points for Bank Nifty. That generally is an indication that maybe there's some round of short covering which has actually started off in the banking index. So this again indicates that maybe we could get into a drift or a range in both the indices. And I think in that kind of a scenario, initiating a trade on the index would be a bit a bit of less risk reward as well as not too much of a trend indication, at least over the near term.
Okay, that's the take on banks. And since we're on the subject, and before we take it across to Siddharth Khemka as well as Naresh Mirani, here's Ashish Gupta from Axis Mutual Fund and what his take is on banks in the quarters to come.
Bank earnings has gone up. Last year, we were probably at some sort of a cyclical high in terms of bank ROA, not just because the margins were elevated, but also because credit costs have been unusually subdued because we were coming from a post-COVID period. And given that, definitely there will be a moderation in ROA for the banking sector in the coming year. Having said that, as you mentioned, banks have underperformed last year, and the markets really did not pay up for the fact that ROAs for the banks improved. And therefore, despite the fact that the return on assets for banks has peaked out and will be moderating, I think the valuations are really comfortable enough for us to be positive on the sector.
Okay, so of course, that's the view coming in on the banking sector. But Naresh, let me come to you and ask you quickly about the index itself, because the heavyweights are a bit under pressure. Which are the pockets of strength, if any, within the frontline index in the sectors?
So very clearly, we are seeing a recovery in HDFC Bank and Reliance Industries. So that makes the whole index positive. Reliance has been testing that 2630 mark, 2650 mark. If that breaks out, that could be the one which could lead the markets. Same way, we've not seen a follow-up selling on HDFC Bank, which after testing that 1700 mark has drifted lower. So overall, we are still stuck in that band as of now, 21,450, 500 on the downside and 21,800 on the upside. So for now, more time to focus on the mid caps and the small caps unless we start crossing 21,800.
Okay, that's the take coming in on Reliance. So far, so good at least, but let's see what the last 1 hour has in store for us. Couple of other buzzers today. So, sporadic moves. ICICI Bank, which has been the weak link last 2 days and actually dragged the Nifty Bank, that's actually holding up by about 1%. HCL Technologies is actually pretty strong today. About a 2% uptick is what you're seeing on that stock. And that's, I think, the solo IT contender, which is actually in the green, because Infi as well as TCS are surely not. There's Trent, which has made a fresh high, has been consistently making fresh highs, actually. Another 2% higher for Trent today. 3173 is where that stock is. Cipla has made a very good move. Interglobe Aviation is holding up sky high, 2% higher for that one. Adani Enterprises is looking very strong. And then there's Crompton, which has jumped up about 2.5%. Quite a unique one to make it to the top of the F&O gainers list, but 2.5% nonetheless higher for this one as well. And a whole host of these small and mid caps which are giving fresh breakouts. Look at what's happening on NCC. It's almost going to hit that 200 rupee per share mark. NCC, the intraday graph will just come up for you on your screens. It's an 8% surge on that stock today, already hitting 190 plus levels as we speak right now. But Siddharth, what's the portfolio strategy right now? Is it time to book some profits, keep some cash dry on the side, or would you say continue deploying fresh money even at these levels in individual stocks?
Yeah, very good afternoon. So if you look at the overall view on the market continues to remain strong and positive in terms of earnings. The earnings momentum has been pretty strong in the first half. H1 of FY24, we have seen a 30% earnings growth in the Nifty earnings, and the overall asking rate for the full year is still in excess of 20%. So while the base would catch up and the pace of growth would marginally come down, we see strong earnings growth momentum which would continue to drive stocks. And hence, we don't have a cash call right now. We believe that there are various sectors where the valuations are comfortable. The earnings are picking up. So if you take the example, earnings for several sectors which have been you can say sluggish for the past several years has now been picking up. Sectors like automobiles, real estate, capital goods, infra, industrials, utilities, hotels. And to top the group is the PSU packs, be it the banks, be it the industrials, be it the utilities, be it the oils, and the HPCL, BPCLs of the world. So they all are reporting strong earnings growth, and combined with that, we have the valuation comfort and a lot of under ownership in the market, which is driving these stocks. So overall, we would say that you have to be stock specific in this market, and we continue to remain positive.
So that stay with us. Lots more to talk about. For now, we're going to take a very quick break. ONGC, IGL, Metropolis, Manappuram, these continue to be drags on the market right now. The closing trades right here on ET Now. Well, Indian Oil and BPCL, they've initiated the process to launch rights issue for green projects. In fact, we have understood from our sources that both IOC as well as BPCL have also appointed lead managers, and the process is likely to be completed by mid-March. In fact, the finance minister, remember, had announced in the budget itself to fund OMCs via equity for green energy projects. And my colleague Prakash Priyadarshi joins in with exclusive details on the same. Prakash?
Yes, we are learning from our sources that the oil marketing companies like IOCL and BPCL have initiated process to launch their right issue. In fact, sources are informing that the IOCL has appointed Axis Securities as a lead manager to launch right issue, and SBI Cap and ICICI Securities will also assist in this process. When it comes to BPCL, we are given to understand that the BPCL has appointed ICICI Securities as a lead manager. IOCL and BPCL will launch right issue to get funding from the government for their green transition projects, and both these companies have already taken permission from their board. When it comes to HPCL, we are given to understand that the ONGC is likely to make preferential share allotment to the government to fund HPCL's green transition projects, and this whole process have to be completed by mid-March. As you are aware that the government had announced rupees 30,000 crore financial support to the oil marketing companies for their green transition projects, but the government does not want to provide this money in a way of subsidy. In fact, government seeks equity from these companies in lieu of funding. The process have been initiated, and we are expecting that this process will be completed by mid-March.
Okay, we'll see how that progresses. But Siddharth, your view on the oil marketing companies, because of late we have seen downgrades come by from a couple of brokerages as well, and these overhangs in terms of rights issues and the government, regulation, etc., which is there for the sector. How would you play this now?
Yeah, I think that has been a big concern in the market of late, mainly on concerns of the government intervention and the price cut, which has not been taken place, but could take place. The rights issue, I think, if they are entering into the green energy space, we have seen how some of the power sector stocks, be it the NTPC, be it Tata Power, the renewable space has led to a strong re-rating for them. I think a shift from the traditional the crude or the traditional fuel to green fuel would only help them scale the business and help them in getting the valuations re-rating. So we are generally positive on the entire space. As of now, we believe that some of these companies do offer some value on table, with the numbers being improving as well as valuations being very comfortable. And top it all, you have the dividend yield comfort on them. So both on the upstream as well as on the downstream, we believe that at least for the next few quarters, results are going to be pretty strong. Brent crude has kind of stabilized. We have seen a lot of volatility globally in terms of geopolitical tensions, some of the wars erupting, and the OPEC production management, which has only led to a stable that $80 to $90 barrel per mark crude has been hovering. That is kind of pretty good for both upstream as well as downstream companies in a stable environment. And some of the GRMs we have seen which had contracted earlier and now also started to improve. So marketing side also the margins should improve going forward.
Okay, got another piece of info coming in, and this time around on FMCG, even as the standoff between Unilever distributors and management continues, Parle as well as Marico have sweetened the fixed margin for distributors. In fact, we at ET now learned from our sources that Marico has increased fixed margin by 2%. Parle biscuits have also sweetened the margins for distributors. Asta Chopra, my colleague, joins in with more details. Asta, what are you picking up from your sources?
So after the standoff between the distributors and the HUL, other FMCG companies like Marico and Parle have also changed their margin structures. But this time they have sweetened the margin structure for the distributors. They have increased the fixed margin for them. If you talk about the margin structure, then Marico increased their fixed margin structure to 5%, which was 3% earlier. And Parle biscuits have increased their margin structure to 5.3, which was 3% earlier. And Parle snacks also revised their margin structure to 6.7%, which was 5.5 earlier. They also increased the variable margin, but this is not as burdening as their HUL variable margin structure was. So they all increased the variable margin structure to 1%, which was 0.5 earlier. So the distributors are happy with these fixed margin because they are getting 5 to 6% of fixed margin structure. They are agreeing to the terms of the Marico and Parle, but they are still in the disagreement between the margin structures of HUL, and they are still waiting to HUL to respond back and revise their margin structures.
Okay, point taken. That's the latest coming in as far as HUL is concerned. But let me take it across to Naresh and get a sense for these FMCG companies as well. They have been big underperformers, but are there any names which are breaking out now, Naresh?
So most of these names have been sideways. Few leaders have been currently is Godrej Consumer, which broke out into new highs. Then there is a Imami, which broke out recently and is testing a multi-year highs out here. So out of all the names, two names which come up on the radar is Godrej Consumer and Imami. Hindustan Unilever has been on radar. Multiple attempts around that 2650 to 2700 marks have been a failure. But this has been the case for the last 2 years. But if it can sustain 2650, 2700 levels, that would be a breakout. But for now, Imami and Godrej Consumer look interesting.
Okay, that's the take coming in on some of the FMCG plays. Kunal, but let's in-depth, shred out what you're reading now on ICICI Bank. Today, of course, it's not fallen. It's holding up about 1%. But as a pattern, do you think it's sustainable, today's move?
So we'll need to see one more day of strong price action. In the last 4 days, as I was mentioning earlier, that the stock is still making a pattern of lower highs and lower lows. Now, yesterday's high, for example, for ICICI Bank on the spot levels was around 995. Today's high so far is around 992 approximately for ICICI Bank, which means that the stock has to either surpass yesterday's high to break this pattern, or if in case the correction aggravates a bit, then maybe the stock can come back towards its 50 DMA or the 200 moving average, which is closed at which is placed at 940, 960 levels for ICICI Bank. So whichever way, I think we'll have to wait out for maybe one more day of confirmation. If the stock breaks past about 995 mark, that could probably be an indication that maybe the 4 or 5 days of selling pressure is now behind, and the stock could get into a restart of a strong uptrend for itself.
Okay, point taken. Let's take the closing trades as well. Naresh, what's the closing idea?
So that would be a buy on Crompton Consumer. The stock has given a breakout after going through a sideways consolidation for last many months. Hit a 6 to 8 month high also. So expecting this to go towards 360 in the short term.
How about you?
So I'll go with Voltas as a buy. The stock has finally managed to make a comeback again about 1000 plus levels. Looks attractive for a target of at least another 10% on the upside over the near term.
Okay, so both the picks coming in from the durable space per se, Crompton Consumer as well as Voltas. Tell you what, we'll slip in a very short break. Don't go anywhere.